Monday, February 16th, 2009. Money for Breakfast starts right now. Good morning, everybody. Happy President's Day to you all. Very good President's Day. We welcome you to Money for Breakfast. I'm Jenna Lee, along with Charles Payne. Connell McShane is going to join us in a moment. It takes all three of us to replace Alexis. She's taking the day off.
Those
so
are
happy
big
holidays.
pumps we have to fill.
We
right?
do. That's absolutely true.
All right, America's greatest business rivals. This President's Day holiday means sales at some of your favorite retailers. And Abercrombie Fitch may want to take a note from some of its competitors. The popular clothing store chain announcing last week its fourth quarter profit was down by 68%. That is a rough environment. In the meantime, The Gap getting some free promotion from the First Lady, Michelle Obama, who said she likes to kind of mix in the Gap's clothing with her designer threads as well. So let's take a look now at where the wardrobe war began between Abercrombie and Fitch and The Gap as we continue our look at America's greatest business rivals.
Two words, all American. Two companies, Abercrombie & Fitch and The Gap. They've built their global businesses on that image. And it's an image that has burned their businesses and brands into the minds and wallets of young America. Abercrombie & Fitch's brand is the edgy, preppy look. It began as a New York City outdoorsman store in 1892. One of its former customers? Adventure pilot Amelia Earhart. Now, a wrinkle was thrown into its plans when it filed for bankruptcy in 1977. The Sports Authority bought it a year later. Then in 1988, it was acquired by The Limited, which sold its stake in 98. Abercrombie & Fitch transformed itself into a youth-oriented brand while its ownership was being ironed out. It's become a lifestyle for the young willing to pay premium prices. It has 4 labels: Abercrombie for 7 to 14-year-olds, Hollister for the 14 to 18-year-old surfers, its Greenwich Village-inspired Rule line for 22 to 35-year-olds, and Jilly Hicks for 14 to 35-year-old women. And it all sizzles with sex, which is why its male catalogs were yanked from U.S. stores in 2003. The controversy began in 1998 with comparisons to soft porn and persisted right up until the catalogs were shipped overseas to Europe. Meanwhile, The Gap projects a casually cool image. Its first store opened in San Francisco in 1969. Get this, it sold albums and Levi's jeans. Now, over the next 30 years, The Gap pressed on and cashed in on classic styles of khakis and jeans. It's grown into a one-stop shopping experience for the entire family with average incomes. The Gap has expanded by acquiring Banana Republic and building up Gap Kids, Baby Gap, the budget-conscious Old Navy, and Piperlime for shoes and handbags. Then it struck gold on the red carpet for the Oscars in 1996.
Sharon, what are you wearing? I'm wearing a Gap t-shirt.
And stars have consistently appeared in Gap ads, including recent Grammy winner Jennifer Hudson. But whether you decide to shop at Abercrombie & Fitch or The Gap, deciding where to invest might be found in the numbers. If you owned 1,000 shares of Abercrombie & Fitch stock on February 11th of 1999, well, it was worth $37,750. Those same 1,000 shares worth $20,300 today. If you owned 1,000 shares of The Gap 10 years ago, it was worth $42,000. Now, just $11,500. Would you invest today?
All right, for more on that rivalry between Abercrombie & Fitch and The Gap, I'm joined by Jeff Green, president of the retail consulting firm, Jeff Green Partners, and Craig Johnson, president of Customer Growth Partners, is here in our New York studio. So let me begin with you, Craig, on this rivalry. We see both the stocks have certainly given up a lot of ground here. It's been tough times for this industry. Is it more like Abercrombie versus Banana Republic? We talked about the Banana Republic acquisition. Is that the direct comparison?
Well, that's a partial comparison. Again, these are two great storied franchises that are going in slightly different directions. They each operate several different nameplates appealing to slightly different parts of the market.
Which one's better positioned right now?
Well, we think from a financial point of view, Gap is doing a little bit better. They're managing the basics better in terms of inventory management, inventory turnover, and even in this down times, they're actually improving the numbers from an operating margin point of view.
We look at the one-year chart on The Gap. It's been a tough time there for more than 1 year. I mean, there's been a rough spell for The Gap. What do you think, Jeff, of that assertion by Craig that The Gap, from a financial perspective at least, is better positioned? Which one do you like?
Well, it's interesting. I do agree that from a financial position, Gap is probably better positioned, but from a consumer's perspective, sex always beats color, meaning Abercrombie & Fitch seems to beat Gap.
Sex always beats color, even though you have that bright orange sweater on today. That's a lot of what that position that leaves you in there, Jeff.
Tells you a little bit
We talked about the ads in the piece that we did, setting up that Abercrombie's become very well known for these racy ads and everything else. They also are known for not cutting their prices, even though everybody and their brothers cutting their prices in retail. What do you think of their strategy?
Well, the strategy can be right. You do not want to, they're trying to protect a brand and not let it get diluted. The problem is if you do that in these economic times, you have to be able to read and react to market and manage your inventories and your cost structure to be able to accommodate that higher thing as opposed to sales.
It's a much more difficult strategy to put in place than to make it work. What do you think, Jeff? Is this going to work for them? And because you're making the point that, essentially sex does sell, that these racy catalogs are going to make a comeback and they're going to move forward with that strategy.
Oh, yeah, they're going to move forward with that strategy. And, again, they took an approach that was so unique over the holiday season by not discounting that it remains to be seen whether that's going to work over the long haul.
Yeah, what do you follow up on that, Jeff, real quick with us, because that is a markedly different strategy than just about anybody in retail took on. What did you make of them not discounting, and will they have to go back on it?
Oh, I think they'll have to go back on it, and I think that they will begin to start discounting a lot more than we saw at the holiday season, because I think that really hurt them.
You agree with that?
In part. I think the strategy at Abercrombie & Fitch proper, the A&F stores proper, of maintaining the high prices is the right strategy, but they do have to size down the business to keep supply and demand in balance. What they are doing on the younger brands, the Hollister brand and the little Abercrombie, the Abercrombie for kids, they are bringing some initial price points down there, which I think they have to do now in view of where the market is, the recession, the fact that families and younger moms, they have to be able to afford stuff.
Yeah, makes sense. All right, Craig and Jeff, we appreciate both of you coming on. So the Gap's better positioned financially, retail on the consumer side will